So this is my new company, Top Producer Investment Capital. We went through a rebrand. And so our niche is, realtors and loan officers because they understand real estate in general to help them finance passive investably in these. And I used to be a loan officer, so I speak the same language that they do.
So that's what your brand, everybody. This is really, it's a teachable moment. If you go back, Ryan is already talking about his brand, who he is targeting. He's speaking to those people, just like Jake and I were speaking to people who are in the residential space, who are, professionals, small business owners, and people who are in multifamily. Ryan has got that clear right now. That's who he's focusing on, his capital raising in his company. I love that. Thanks for sharing that.
Absolutely. Yeah. It's been more than half of my investors have come as either realtors and loan officers, and it's an easy sell because they get it. They see what I'm doing, and they said, yeah, I want to be a part of it. Thanks so much. So,
and the terminology is there in the branding, top producer. Everybody in that space is very familiar with that. So it's great.
Yes, that's great. That is excellent. Good pickup, Stenziano. I like that.
I just work here. All right.
With the pretty face, my friend. Don't worry. Don't forget that part.
Excellent. So I'll talk about our first deal that I bought in Gonzales, Texas. And here are the deal partners. There's me. I do snowboard. So if anybody else is snowboarder, skiers out there, hit me up. Let's go to Colorado and hit the slopes a little bit. And these are the partners that I had, Shariah Khan and Leighton Moore. And Leighton's wife, India Moore, is not pictured on here, but she has been phenomenal in helping out with the construction and renovation process of the property. And we've got another deal we're working on together too, and they've just carried over and been, great partners. So this deal actually came about, like you said, I met Leighton at an event, and I had posted on the Facebook group that you guys have that, hey, I've underwritten, I think I'd underwritten 150 deals in Texas, lots of different markets. You guys told me to niche down, so I was trying to niche down, but I was, hey, here's all the things I'm doing. I'm making my calls. I'm going on tours. I haven't gotten a deal yet. What's the next step? What am I missing? And Shariah was great. He saw my post and he says, that's the guy that I want to work with. He's motivated. He's taking action. He's going to these events. He says, hey, look, I've got a lot of deals going on in my pipeline. I'm working on these really big properties. There's this little one. It's in a small town. I don't know if it's a good deal. I think it is, but take a look at it. Let me know what you think. It's from this wholesaler. It might be a lot of work, but it's your first deal. It's a great way to, get started. And if you need any advice, give me a call. I'll help you along with the way. So the deal came about from the Jake and Gino community. The partners came from the Jake and Gino community. The earnest money, the capital, everything was part of joining it.
Sounds like one-stop shopping. This is wonderful.
It worked pretty well. And, so yeah, I definitely owe this first deal my whole start in the career. And since this first deal, I've been able to close on 5 properties for about 170 units here in Texas since joining. So
fantastic.
And how long is that? That's been less than 2 years. I mean, that same thing with Senate. Senate says he's done 12 deals and it's less than 2 years. I think once you join and you get that buy right, the manage right, the finance right, you get that framework. Like Jake says, you have the clarity, and then you may have a missing piece. You may not have the capital. You may not have the community. You may not be able to know how to underwrite a deal. You may not have the market. Whatever that component is, you can find it in the community. And I think both of you are real testaments to that, where you might have been missing one component, and that component you can find it in the community itself.
Absolutely. Yeah. And here's just a little more information on that. Yeah. Previously to joining, I had a couple of houses, but no apartments at all, even though I was full-time in multifamily. And yeah, you guys provided the opportunity to network, learn from people doing actual deals, and really build the confidence. Because even though I'd spent a lot of time in Excel on spreadsheets, it's nerve-wracking to send out a real LOI, and when someone says, hey, we had to put $40,000 of earnest money down to get this deal, it's you're kind of shaking. You're like, all right, well, if I do this, what happens? What if I lose all that money? So definitely getting the confidence and having a coach to reassure you to say, hey, look, this is a good deal. We've done this before. You're going to get it closed. It's going to work out. So of course, yeah, and the partners have helped with every aspect of the deal: earnest money, construction, property management, capital raising. And I don't know.
It's also, I want to mention this also, Ryan. It's wide open. You're not competing with Gino and myself for capital raising. It's a completely open community, and there's so many opportunities to, I think, partner, and then also, like you said, raise capital. It's huge.
Right. Yeah. And I don't know if you guys know this. I've checked out a couple of the other, there's a lot of educators in the space, and I decided to join your community because of the community that you guys have, the way that you guys individually are so geared towards helping your students, building connections, fostering that community that I didn't see other places. So
appreciate that.
Yeah, definitely. That was a big factor for me getting in. So to talk about the deal itself, this is in Gonzales, Texas. Here's a property over here, Harmony Village. We were putting the finishing touches on the sign that day that we took the photo. So it's a small town. It's about an hour southeast of Austin. And Texas is great. A lot of people are moving here, but 7,000 people in the whole town, and this is a 32 unit apartment. We've got about 0.5% of the whole city living in here.
You're a big player.
But Jake, take a look at the numbers though. It's 53 a door and rents were at 650. I'm just saying that there's
and
your
look at the
limited
quality of the
downside risk.
construction. You can see it right there. Those look like true apartment homes to me. They got washer dryer hookups.
So we have a laundry facility at the end of the property, but they're all 2-bed, 1-bath, identical.
Beautiful.
Like they're all fourplexes basically.
And that's what I'm saying. Like you're limiting your downside risk. Somebody may be saying, "Hey, this is only gets 7,000 people. my exit strategy may not be able to flip this thing or get rid of it." But this is a deal where you have multiple exit strategies. I don't want to get ahead of myself, but I get it.
Cash flowing. I mean,
yeah,
I don't want to get ahead of myself either and steal his thunder, but you can tell. Like, I don't need to be a rocket scientist to tell with these numbers that this thing is not going to cash flow like a monster.
But Jake and Ryan, you underwrote 150 deals. You spent months underwriting deals, but you've got the life-changing deal of a lifetime here. That's what it comes down to, doing a little bit of work on the front end. And then when the deal comes, Ryan, you've got your buy right criteria. You figured, oh crap, this is awesome. This deal is going to work. It's a 53 a door. I'm getting rents at 650. It's above the 1%. And I know if I do all this work, if rents go to 975, wow, that is a home run. Great job. Continue.
Absolutely.
I'm sorry.
Yeah, and the beauty about underwriting 150 deals is when this one came across, it took no time at all to know that, hey, this is a deal right here. Like I have seen what else is out there. Let's do it. So very similar to Sennett's story, actually, we had toured this one. We had verbally given them an offer. I think we even sent the contract over to them, and they said that they would sign it. It was a wholesaler, so the earnest money went hard right away. So I think we had 2 or 3 contingencies we wanted to get removed before we would sign the contract fully and go hard on the earnest money. And so over like 2 or 3 days, we were knocking out those last contingencies, like inspecting a couple of units and getting the insurance loss runs, just because the earnest money was hard day one. And during that time, the wholesaler came back and said, hey, we had another offer that was a little higher. Originally, we had this verbally agreed to at 1.6 million, and they said you got to go to 1.7 if you want it, but we'll give it to you at 1.7. So it was tough to do. I wish I had gotten a 1.65, but we, very happy at this.
Dude, price. You're doing fine.
I'm glad we got it closed. And then the rents were at 650. It's a small town, no other apartment.com comps, no Zillow. I had to go there in person, talk to local realtors, talk to some other properties, and just run comps myself in person because you couldn't do anything online. And most of the town said we could get to about 800. Some of them said you might be able to get a little higher if you do a nice job. And, we were able to put, we put 11,000 a unit. It might not have needed that much, but, they look phenomenal. And you can tell we were able to get it all the way up to 975 with the quality of the renovations we were doing. So total, we spent, 24 of the units we renovated out of the 32, 140 on the exterior. So we put 380,000 total into it, but the NOI was $67,000 when we bought this. And as of, basically we've got stabilized. We take February's monthly rent and continue it out 12 months into the future. The NOI is 195,000. So on a 6.5 cap, that's a $3 million valuation. In Texas, we've seen cap rates, they've come up to about between 5 and 6. Small town might be around 6, but 6.5, I would say, is conservative. So I think, our financials, we get about 28,000 a month in revenue, and our expenses, including mortgage payment, is like 16,000. So we're making 12,000 a month every single month. So we, once we could take a second lien out, pay back all the investors, but getting 12,000 a month after all expenses, all payments, that's pretty nice too.
You bought yourself a little ATM machine there.
It's life-changing stuff. That's the PPU. What is that? 12,000 divided by 32 units. That's a huge, what is that? $400 of profit per unit per month. That is phenomenal. Right. That is awesome.
Part of that comes to, we've kept the costs low because India and Leighton, their background, they have 25 years in construction. And so they were able to source materials cheaply, source labor cheaply, run it efficiently in-house. And same with the property management. We had a hard time even finding a third-party property manager to go out to a small town like this. And luckily, the lady that was already doing the property management, knew it and wanted to work with us. So we pay her just $10.99, every single month. I, got Buildium as the property management software. I learned how to use it, and then I taught her how to use it. And we've got a system where we go together, and there were a lot of bumps along the way, learning how to work directly with someone like that on site. But we're saving quite a bit by not having to pay a third-party manager, and things happen quickly and effectively because it's direct. So originally I underwrite this to a 15% limited partner IRR. This is a 70-30 split, no preferred returns, and they still got a 15 IRR. but that was based on a pro forma rent of 800 a month. So once we got 975, the project IRR went to 36%. So all the limited partners, including myself and everyone that invested, they're going to get 28%, on their money year over year as internal rate of return. And a lot of that too goes to the loan. We had a 30-year amortization, 80% loan to cost, including renovations at 3.75 fixed for 15 years before balloons. We got so lucky. And a lot of this, again, came from the connection.
That is fantastic.
Yeah, this was so Shariah has just really good connections with the finance industry. I think that's his strong suit as well. I called a bunch of banks and they were giving me rates in the 4s and 5s, and he said, "Hey, I'll call my guy," and he got a rate.
And he smoked that for sure. So, that's beautiful.
Yeah, he did that. Yeah, and I talked about the self-managed. So a lot of this has been a good learning experience, but the way we've been able to run it effectively, keep the costs low, is just doing everything in house. So it takes a bit of time, but man, those numbers look great once you do it, and then you learn the systems and you can automate them and you can have people help out with that along the way. So
Gino, I'm drooling on this debt right now.
I mean, like we've heard two nice debt stories. I mean, that's part of the thing when you learn. We weren't using credit unions 3 years ago. That's a nugget. Getting in there, using credit unions for multifamily. And I think the next nugget that I'm learning here is partner up with people. I mean, there's so many people in the Jake and Gino community. Shariah is great. Leverage what he does really well. He's got investors. He's got really good financing capabilities. Leighton, you find somebody who does construction. He can, you're saying, I'm lucky I got this. I'm lucky I got that. But you put in the hard work. You invested in your education. You got surrounded by people who know what they're doing. And then you find the deal. You put the deal together. And then you guys go out and raise the money and take the deal down. And then you're out there, actually out there. And like you said, he's sourcing the stuff. He's doing the work. And you're putting a quality product together. That's a nice.
That's what I wanted to comment on. How nice the unit turns were. That is a quality home for a resident for sure.
Yes.
Look at that.
Well, and you know what's funny about this is the leasing manager. We'd have leads come in and apply, and they say, "Hey, how much is the rent?" And she'd tell them, "Well, it's originally it was 900 a month before we got all the way to 975." And they said, "Oh, that's too high." And she would call me. She said, "Yeah, people think the rent's too high." And I said, "Show them our website. Show them this video of me
get them in there.
How good they actually look." Because we didn't, we were all occupied. So I said, "You got to show them the renovated." And then once they saw the video, they were like, "Oh, yeah, absolutely. If it looks that good, I'll take it." So yeah, this
is like some Joanna Gaines action going on. So
late Nate, no joke, Jake. That's what I'm saying.
Beautiful.
Quality work. So this is our Gonzalez deal, our flagship property. Definitely hit it out of the park here. We're hoping all our other deals do just as well as this one, and so we're working on them. So as far as what's coming next, I'll talk about this project. We're always trying to acquire properties. I'd love to get another 3 or 4 or 5 this year. That'd be great. So we probably, I underwrite 2 or 3 a week, and then I'll still send out probably an LOI either every week or so. It's tough to kind of find the really good deals, and I'd like to only do really good deals. So, we got to wade through a lot, and then eventually we'll find one that works. But this is my next favorite project we're working on in Starlight Horizon. This is in Canyon Lake. It's another small town about an hour southwest of Austin. But this is out by a big lake. It's a big vacation area. People, bring their kids. They go boating for the weekend. They want to get away from the city. So we've got 14 of these cabins on this little, map down here. And they were all long-term tenant owned. They were paying $1,400 a month for 3-bed, 2-bath cabins. I call them cabins. They're really, small houses. But we're renovating all. This is one of the first finished products. They're beautiful on the inside. And we're able to get $300 a night on short-term rental. So our pro forma, if you do the rents from $1,400, we're expected to get $3,000 a month per unit for each of these 14 units. So the NOI is going to jump through the roof. I think it goes from 178 up to 300,000 for the NOI. So.
And that's conservative because $300 a night. All you need to do is fill 10 nights. If you're 1/3 occupied, if you fill it for 10 nights out of the 30 in the month, you're going to hit that $3,000. You've more than double the rents. I mean, the place looks beautiful. Like Jake said, there's little Joanna Gaines going on there as well. So
awesome. Cabinets. It's fancy, man.
Yeah.
Should be real fun. We're building a pool over there, courtesy of Leighton, and we're gonna have a lot of entertainment, a lot of things to do. So this is coming down the pipeline, and I love just the creativity of this project and turning something new that wasn't there before. And so I'd love to find what else is out there that we can put our signature stamp on and improve the community.
And it's funny, you talk about doing the deals, and what's great about it, this is another PPU play, another profit per unit. You're going to get a significant and something that's really good. Once you've repositioned this, you've got a brand new asset. And what I like about it is the diversity. I mean, this is something different. This is not truly a multifamily. This is more of a short-termish kind of multifamily. And I personally love this kind of asset. This is a great idea.
Yeah. Yeah, it should be a lot of fun. And it's already been a great learning experience. And can't wait to see how it turns out and seeing if there's other projects out there like this. So yeah, as far as, everything I've learned, I mean, you guys can tell this is a testament to what I've gained from the Jake and Gino community, the partnerships, the education, the mentorships. I called my coaches, Mike and Nick, probably twice a week for the first couple of months, begging them every day to say, hey, I got this new underwriting. I got this new property going on. What am I missing? And after about a month of that, they said, Ryan, you know what you're doing. Call us if you need something, but go out there and go get a deal now. So very, very pleased with everything I've gotten. If you guys haven't joined Jake and community, here's the link right here. Get started, take it, call to the next event.
Love that. And where's your contact information? Share your contact
Let
information.
me go. Yeah. So once you guys have that, here's me, Top Producer Investment Capital. If you go to our website, topproducerinvestmentcapital.com, I've got an Instagram, Facebook, YouTube channel, all by the same name. And then if you want to email me, there's my email as well. And we've got a little QR code. So growing the following, that's been the next step on this journey, as well as buying new properties, is growing the capital raising side. I've been working with other members in the community to make sure that the lead pipeline for new investors coming in is, going well, and that they understand the type of product and the type of quality work that we do, so they'll know what to expect on future deals.
I love that. Ryan, can you do me a favor? Go back to that previous slide, because I really want to hammer that home again. Like I said, if you're one of those three types of people, if you're in residential, wanting to get into multifamily, if you're a professional, like Ryan was, because he was in the mortgage industry and then he became a multifamily investor, or if you're in the business and you want to scale up like these guys are doing on the call, you take out the phone, take a picture of that, book a call to team, and see how we can help you on your multifamily journey. Because right now is the time. It is turning into a buyer's market as we speak right now. The opportunities are coming. You just have to learn the strategies. You have to learn how to actually identify a deal. You have to learn your buyer criteria. You have to learn how to finance these deals. I mean, these guys have done some amazing work with the financing. And let's not, talk anything less about manage rate, because as you've seen, they've done an amazing job with managing these assets. I mean, they've turned units, they've saved money, they've raised rents, they've blowing out the NOI. They're talking about how they've added value to these properties, and that's what it's all about. It's all about the NOI game. So take out your phone, take a picture of that QR code and schedule a call with one of the Jake and Gino team members.
Yeah. And I just want to say, Ryan, keep doing what you're doing, because you're growing your investor list through your actions. Your actions in terms of providing great returns and quality homes for your residents, that's going to grow your investor list through word of mouth and everything that you're doing out there, making it happen more than anything else. So keep up the good work, man. You're crushing it.
Will do. Thanks.
Thanks, Ryan. Jake, want to wrap it up?
Yeah, no, appreciate everyone for being here tonight. Absolutely love these calls, because it's just a testament to the hard work that everyone's putting in and following the framework: buy right, manage right, and finance right. I say this all the time. Multifamily investing is not rocket science, but you need to understand the framework. You got to get the basics down and surround yourself with the right people. So appreciate everyone for taking time out of their busy schedules to get on with us tonight and supporting these fine gentlemen. So thank you guys, and Gino, have a good night.
Thanks, Jake. Thanks, everybody. Once again, big shout out to Ryan and Senate for coming out there, sharing their story, and to all the Jake and Gino students for having confidence in us in the community, and for going out there and taking massive action, because a lot of these students are taking massive action. So that's what we want to see. So Jake, thanks for being here tonight, and everybody, we'll see you soon.